Excited to welcome one of our partners from Kanmon, who's going to talk a little bit about how to secure financing for your moving company. So with that, I'm going to turn it over to Drew.
Great. Thanks, Matt. Nice to be here. My name is Drew Lewis. I lead growth here at Kanmon. What we do is we work with software companies like Oncue to help them offer commercial loans to their customers. So Matt, if you want to go to the next slide that has my face on it. Yeah. My background over the last few years has been in financial services and software, but before that, I grew up in a Navy family and spent almost 10 years in the Navy myself. So without telling you how old I am, I've moved homes more than 30 times in my life. So for someone who's not directly in the industry, I think I've had pretty good amount of experience, at least with residential movers. So pretty excited to be working with Oncue. The team is super focused on creating the tools and services that you need to scale your moving business. And we're very happy to support a piece of that. I don't need to tell you all this, but operating a moving business successfully can be a real challenge. Obviously, it requires building and maintaining strong reputation digitally and in the real world, a consistent service that you're offering, managing complex labor operations, other kinds of logistics issues, complex cash management through seasonality, those kinds of things. A lot of those projects require investment either in the form of time or cash, and time, for all intents and purposes, is cash. So the purpose of today's talk is to go over a little bit about the machine that keeps all of those projects going from a financial perspective. So we'll talk about working capital, what it means, how to think about it. We here at Kanmon are a licensed commercial lender and work with small businesses, primarily to help them access different kinds of working capital loans. So we're the finance people. Also going to talk a little bit about how a moving business owner specifically might use short-term loans to grow their business efficiently. And we'll talk a little bit about how Oncue Capital, which is what we here at Kanmon power, can help. So obviously we're recording this, you can send it out. If you have any follow-up questions, we've got a great support team you can direct those to, and I'll give you information on how to get in touch. So that's where we'll go. So next slide, Matt, please. So there are really two main jobs of any business owner, to the extent that some of you on the call are business owners who know this. Job number one is don't run out of cash. And job number 1B is to try to use the assets of the business to generate more cash in the most efficient way available to you. So financing is really a core activity for any business. This is the case for moving businesses, it's the case for all businesses. It really enables short-term cash management and longer-term growth and expansion. Based off of the sort of Fed survey data, an average of 40% of SMB firms applied for financing over each of the last 6 years. So really is something that everyone is doing and doing every year. On the first piece, we all know that a business dies if it runs out of cash. So for businesses generating less than about $5 million a year, cash is always tight, especially in the moving business where we typically see margins between 10 and 15% of revenue. If you want to go to the next slide, Matt. So we call this cash that you need to run the business. It's working capital. It's like a fancy term. The technical definition is the difference between kind of current assets that you can convert to cash within a year, and current liabilities, so things that come due within a year, debts that you come due within a year. That's kind of boring and technical, but what really it is, working capital is, it's kind of a core asset of the business. It's the part of the machine that really generates cash. So the analogy I like to use is like blood in the body, or water in a water wheel, or maybe oxygen in the lungs. So as a business grows, the working capital needs really change. And often you don't think about it unless you don't have enough of it. So that's something to sort of keep in mind. It's like it's a core asset of the business. And it really is what enables you to do the things that you do. So if you go to the next slide, it can be really hard, especially for a small business that has kind of complex cash flows, to wrap your arms around given businesses' working capital needs. So you don't have to really be able to see exactly what this is showing here, but it's just a little snippet of an example kind of 13-week cash flow forecast, which is about the amount of time that gives you enough time or short enough time frame to be really precise about when you'll have cash coming in and when you think you'll have cash going out. Just to give you an idea of how a lot of business owners drill down into their cash inflows and outflows. So you might be doing something like this with your team, but what you really want to think about here, or the purpose of like showing this, is to point out that when we are doing a cash flow kind of management exercise, you want to get early line of sight, kind of as early as possible. If your ending cash balance, so the difference between those inflows and outflows for any given day or week, is going to look like it might dip into the red. So when you have advance warning of that kind of happening, you basically have a couple of options. They sort of boil down to pushing out your bills. So pushing out the time that you have to pay someone for something that they've done for you, trying to get paid early for something that you've done, raising equity. So basically putting in a cash injection from either yourself or investors, or raising debt. So this is sort of where we fit into the picture here. There are really only 4 options when you need to sort of shore up working capital, and we are one of those 4 options as a debt provider. But raising debt really doesn't only apply if you're kind of staring down the barrel of like a cash crunch, if you're about to run out of cash. So Matt, if you go to the next slide, remember sort of 1B, the second sort of key responsibility in the financial world of a business owner. The idea is to use the assets of the business to generate efficient growth. So what debt does, or working capital loan does, is apply leverage. In other words, use a loan to kind of invest in growing the business itself. Maybe you want to do sort of a big push into SEO and want to bid on Google AdWords. Well, the cost per click for moving company New York City is somewhere in the order of $20 a click, and those things are going to add up quickly for a business owner that's kind of making the right investments into SEO. Maybe you just started using Oncue booking and you're seeing a lot more volume, and you need to hire a new crew. Maybe you want to buy uniforms for your crew. Maybe you want to hire a field manager. As the business grows, those working capital needs will really change. So remember the kind of blood in the body example, or analogy for what is working capital. It's like the difference between how much of blood is inside of a 12-year-old versus inside of a 25-year-old. The needs are different with the changing sort of size and shape of the business itself. So like I mentioned before, the 2 primary ways of fueling that growth are through equity. So either you yourself or maybe an investor are injecting cash into the business, which can be pretty expensive from like a returns perspective, or through financing. So taking out a loan in order to help do that kind of investment at a sort of appropriate cost. So if you want to go to the next slide, Matt. What is Oncue Capital and how does it help here? So essentially what we have done as Oncue's partner here is built an ability for a moving company to take out financing directly alongside the software platform that they use every day to manage their business. So our kind of core product philosophy has a couple of components. One, we really want to enable a natural kind of user experience that makes access to financing really straightforward. It really is supposed to be just like working with Oncue. We have a long-term relationship with Oncue, and we can get to know the challenges that a moving company that is working with Oncue faces better than a third-party lender. So we can really get a better overall picture of the context that you as a business owner operates in. Two, we want to take advantage of the information that Oncue has about you, the mover, to help really improve our underwriting and the experience for you. So we also really strongly believe that access to this kind of platform data makes things really simpler for you. We don't want to ask Ro for information he's already told Oncue. Oncue knows that Ro's Movers is from outside Chicago. Oncue already knows who owns it. So we can make it a lot simpler for Ro when he comes to Oncue Capital to take out financing. And I'll use that example because Ro's Movers is one of our very happy joint Oncue and Kanmon customers. So finally, we want to be really transparent about pricing. We only succeed when we're offering kind of a best-in-class financial product at the right price in the place where you all are already doing this kind of work to grow your business. And who is Kanmon? So like I said, I'm from Kanmon, and we are Oncue's partner in offering this business lending product. We were started in 2021 by a leadership team that has about 40 years of experience in building lending and financial services products. One of our co-founders was the global head of product for Funding Circle, which is the largest non-bank SMB lender in the world. So pretty deep bench of experience in lending. We are a licensed commercial lender, which enables us to offer the same kinds of financial products that a commercial bank might offer. It also means that we are subject to regulatory compliance, including some disclosure requirements, like letting you know the true cost of borrowing. So really important to kind of highlight here that we are Oncue's partner in offering a really kind of best-in-class working capital product. So Matt, if you want to go to this next slide. Finally, I'll just kind of quickly run through the financial product itself that we work with Oncue to offer. So say, for instance, you know that in 2 months, you're going to be cutting it close on your cash balance and you want to shore that up a bit, or you want to do some additional investment in marketing, you want to hire some staff. A business term loan through Oncue Capital could be a good solution for this. It's a monthly amortized loan up to $250,000 secured by a personal guarantee. Our rates are generally about what you would get from a bank, with generally under 20% annual interest rate and an origination fee associated. There's no early repayment fees, so to the extent that you want to pay it off early, that's possible. We do want to see at least a near prime FICO score for one of the owners, so that's kind of important to point out. We look at a lot of the things that we talked about earlier with respect to working capital. As when we're underwriting a business, we look at the business credit, the owner's personal credit, that kind of cash flow analysis, accounting, and the sort of alternative data related to your operations on Oncue. So like how long you've been a partner of Oncue's, that sort of a thing can be helpful for us. Some red flags for us are around the history of bankruptcy, NSF charges, so non-sufficient funds charges on a business bank account. So remember on the cash flow forecast, if that balance actually did go below zero at some point, it's a very big red flag for a lender generally, because it means it's an indication to a lender that the business owner is having trouble kind of managing their cash flow, doing that sort of exercise of like looking out a couple of months at a time, every week to make sure that the cash balance doesn't dip below zero. And I also lastly wanted to kind of make a quick note about our disclosures. As I mentioned, we are a regulated lender. We're required to be really clear about the true cost of borrowing to you. So when you receive a loan offer, it includes a summary of the amount, the interest rate, the APR. APR is the annual percentage rate. It's just the actual yearly cost of funds over the term of a loan, or the income generated from an investment. It includes fees, it includes other costs. So the key to it is that it's like a bottom line number that you can compare sort of apples to apples from lender to lender. This is something that we as a regulated and licensed lender do for borrowers that are taking out loans from us. It is not the case for all lenders. Certainly cash advance products do not require disclosure of the true APR or the true cost of borrowing. So just one other thing to point out there. Then the last slide. Yeah, so the way, to the extent that you are interested in learning more about the Oncue Capital product, we've got a great support team. Feel free to email us at that help@ email address. The landing page for the Oncue Capital program is oncue.kanmon.com. But feel free to reach out if you have any questions. And I know I sort of ran through things here, but if anybody has any questions now, happy to answer them.
Yeah, thanks, Drew. That's great. Yeah, so take down these two, the email address and the website address. For those of you who have been on Oncue webinars before, you know that you can just hit the Q&A button if you have any questions. Otherwise, I'll just take a quick look at that. Otherwise, thank you all for participating. Drew, any final thoughts or closing remarks here?
No, very happy to be working with Oncue, and definitely feel free to reach out if you have questions. I know financing can be a complex topic, but we are happy to be a resource for you.
Great. Well, thanks for joining. And if you have any questions, reach out to the email address here. And if not, then have a great rest of your day. Thanks.
Looks like
we do actually. Hold on. That's great. Let's just even just answer. The question is, do the loans have specific term periods or do they vary one to another? Oh, that's a good question.
Yeah, so the structure of these loans is a monthly amortized loan. It's very similar to like if you have a mortgage, where it's a fixed term. What that means is that it doesn't vary the length of time for repayment. It's a fixed payment amount, which enables you to really know exactly how much you're going to owe on a month-over-month basis. The term length for a typical loan that we originate is between 6 and 18 months.
6 and 18 months. Great. Thank you for the question. Okay, with that, everyone, have a great rest of your week.